Hi, it's David Bassana, broker and owner of Rise Realty here in Orem, Utah. Today I want to comment on the Federal Reserve's forecast for mortgage interest rates and how they could affect housing over the next 2 years. Well, to give you a recap, back in 2008, we were at the beginning of an economic crisis that really turned into a global economic crisis. In order to stimulate the economy from crashing completely, the Federal Reserve took actions to lower interest rates. At the time, interest rates for mortgages were about 6%, and they lowered the interest rate effectively 3%. The base rate, or often they call it the federal funds rate, went to near zero, actually 0.25%. Now, the Federal Reserve never knew how bad at the time the economy was going to get, and they ended up keeping these rates low for an unprecedented 7 years. And they were waiting for the time in which the economy was strong enough in order to start to increase rates and to get back to what they term as a normal interest rate. Normal interest rates are anticipated to be more like 6 to 7%. Well, last December, they increased the rate 0.25%. This was the first time in over 7 years that the rates have changed. And they are anticipated to continue to go up for the next 2 years. In fact, the forecast for these rates is to go up 3% by the end of 2017. So that said, the federal fund rate is currently at 0.50, and by the end of 2017, they think it's going to be 3.25, which is a total of 3% increase. Now, what does this mean for us? Well, effectively, that 0.25% increase that they had hasn't really affected mortgages too much. It's mainly what they term as a short-term rate. Well, mortgages are based on long-term rates, and really the 10-year treasuries are what affect mortgages. But you can be assured that the 30-year rates will start to creep up. Not at the same rate, but they're projected to increase. Again, what does that mean for us? Well, for those who have never seen rates above 4% for many years now, it's going to be a shock. Mentally, as rates go up, it scares people. And I think that's why the Federal Reserve has been so reluctant to raise rates. I've been reading for years and have thought for years that the rates would have increased, but they didn't. And I think it's all based on the idea that as rates raise, it will slow the economy. So we need a pretty strong economy in order to raise rates. I know there's a lot of other factors in there. I'm not a PhD economist, but I just watch and understand the basics and know that higher rates, in essence, mean higher mortgage rates. And higher mortgage rates means it's more expensive to buy a home. Effectively, if you had a 1% increase in rates, it could mean that the cost to buy a home in terms of a mortgage payment could be upwards of 10 to 12% more expensive. Now, the reality is, I don't think the feds will raise rates nearly as fast or as strong as they've shown. I think my real opinion is that they test the markets to see how everyone reacts. I think rates will go up. That's almost a guarantee. Because I can guarantee you one thing, they can't really go down because there's nowhere really for them to go down. So there's only really one direction, which is up. And whether that takes 2 years or 5 years, you can anticipate that over time, rates will go up. So the conclusion is if you lock in now, you're going to have an incredibly low rate for 30 years. And you won't have to worry about the instability in the rates or the market because you personally are locked in. So if you're looking to buy, I recommend that you, if you can, do it sooner than later. But if you do it this year, I guarantee you'll be happier with the rate you get than you would maybe 1 or 2 years from now because it will be more expensive. Well, that concludes our video blog for today. If you have any questions on this video blog, you can always make a comment below or email me directly. I appreciate your time. If you have any real estate needs, please reach out to me if you're looking to buy or sell a home. And if you're looking to invest, I have some special opportunities that you could take advantage of. So look forward to hearing from you. Take care and see ya.